the next few minutes, you're going to be learning about a brand new benefit program called a Section 125 Premium Only Plan, which your employer is introducing to you. Now, the primary purpose of this program is to help you, the employee, save taxes. Under Section 125 of the Internal Revenue Code, employees are allowed to pay for their portion of certain employer-sponsored benefits with before-tax dollars. This means that some payments made by employees do not have to be subject to either federal or Social Security taxes. And in some areas, even state and local taxes are exempt. Let's look for a moment at an example of an employee who is currently participating in his employer-sponsored group health insurance plan. The employee we are looking at is married, has 2 children, is the family's only wage earner, and grosses $1,500 per month. How much is subject to tax? All of it. Federal tax on a monthly basis would be $127. Social Security, or FICA, would be $114. And this employee lives in Missouri, which requires him to pay $37 in state income tax. The employee's original $1,500 check is now $1,222. However, that's not what this employee gets to take home, because the employee participates in his company's health plan and contributes to the cost. In the example we are looking at, the employee's monthly contribution is $200. The employer deducts this amount from the employee's check and applies it to the health plan. So this employee's original $1,500 check, which was reduced to $1,222 due to federal, state, and Social Security taxes, is now further reduced to $1,022. This employee has paid for his health plan after his salary has been taxed. In other words, his benefit has been paid for with after-taxed dollars. Everyone's paycheck works essentially the same way. However, thanks to your employer's new Section 125 Premium Only Plan, your paycheck doesn't have to work this way any longer. Let's assume you were the employee we've just been talking about. Under your new Section 125 plan, your gross paycheck would still be $1,500. But now we're going to tell your employer to take out your group health plan contribution first, before taxes are deducted. Let's see what happens when we change the order in which you pay for taxes and benefits. Let's begin by deducting your $200 health plan contribution from your $1,500 gross earnings. This leaves $1,300 on which you will pay federal, state, and Social Security taxes. Now, what do you think happens when you pay taxes on $1,300 instead of on $1,500? If you said your taxes would be less, you're right. Federal taxes are now $97 instead of $127. State taxes are $27 instead of $37. And Social Security has dropped to $99 from $114. Your net paycheck, your take-home pay, will actually go up by $55. Section 125 has allowed you to pay for your portion of your employer-sponsored health plan with before-taxed dollars. And most importantly, in doing so, none of your benefits have been changed. The only change has been an increase in your take-home pay because your wages used to purchase your health plan coverage were not subject to tax. How much will your take-home pay increase? It depends upon how much money you make, whether or not the state you live in has an income tax, your marital status, and how you file your income tax return. Which employer-sponsored benefits are included in the premium-only plan? Who should participate in the plan? And will the plan affect other benefits, such as Social Security? Your employer will let you know which benefits are included in your plan. Whether or not you elect to pay for these benefits with before or after-tax dollars is up to you. But as a general rule, you should elect to pay for your portion of your benefits on a before-tax basis. Your benefits will remain the same, but your paycheck, your take-home pay, will increase. Since your contributions into Social Security will be less through the premium-only plan, it is possible that your Social Security benefits may be slightly reduced. For most people, their current tax savings are much greater than any future reduced Social Security benefits. Since no one can predict just what future Social Security benefits will be, most tax advisors encourage employees to take advantage of the premium-only plan's current tax savings. If you are concerned about your Social Security, you may still want to pay for your benefits with before-tax dollars through the premium-only plan. Consider increasing your life or disability insurance. Additional insurance coverages will more than make up for any reduced death, disability, or retirement benefits you might incur through decreased Social Security. Your employer is pleased to be able to offer you this Section 125 premium-only plan. I hope you're excited about this wonderful tax savings opportunity and will be able to take advantage of it soon.